regulators have to ask themselves the question increasingly, how do we exit now this exceptional situation? Is it back to sort of regulation as usual, or have things changed forever? And then on top of that, or in parallel with the firefighting, is the need for regulators to still consider some long-standing issues which are just as important as ever. And of course, the key one, the central one amongst those, is how regulation can actually play its part in supporting Europe's, the UK's, the world's net zero objectives and response to climate change. But I think also a very important issue with which regulators will need to deal with, the associated issue in the ESG space, is the question of how governance regulation aligns with the greater societal demand for a fairer and a more inclusive business system, particularly in terms of business leadership, board membership, and so on. There are, of course, two huge elephants in the room at the moment, as far as regulators are concerned. The collapse in recent years of two major corporations, Carillion in the UK and Wirecard in Germany. And in both cases, huge questions have been raised about the effectiveness of the governance system, about the effectiveness of various governance actors, not least the regulators themselves. So as a result of this, I think that some long-standing questions are back on the agenda for regulators, such as, is regulation tough enough? Are regulators robust enough? Is the existing comply or explain framework, which has been so intrinsic to the European approach to regulation, is that adequate in the current circumstances, or do we need perhaps a tougher Sarbanes-Oxley type approach? And if you then add to all of that the prospect of regulatory competition starting to emerge both on a global scale and also thanks to Brexit now across the English Channel, I think you can see that the job of regulators now is a particularly challenging one. Well, with those comments, what I want to do now is hand over to my colleague Jean-Luc Barlet. Jean-Luc is the Global Chief Compliance Officer at Mazars. And Jean-Luc, you're going to moderate our discussion for us. So over to you, Jean-Luc.
Thank you, Roger, for this overview of what is at stake regarding regulation of corporate governance in the European countries. So clear challenges going forward. To discuss more in detail the regulators' view on these challenges, I'm very pleased to introduce our distinguished panelists. I ask them in 2 minutes to present themselves and underline what is important for them in the road between where we are as of today and where we want to be in terms of corporate governance. And I will start with women first. So Susan Knuffel from the European Commission.
Yes, thank you very much, and good afternoon to everybody. Thank you very much to the organizers for having me here this afternoon. It has already been mentioned. My name is Susanne Knuffel. I'm the deputy head of the company law unit in the European Commission, and therefore you will not be surprised. The framework now of my introductory remarks of where we are in corporate governance and where we want to go will be very much then the Commission's ambition as now also laid out in its 2021 Commission work program to now go forward towards a legislative initiative on sustainable corporate governance. And in the words of the Commission work program, the objective there is to foster long-term sustainable and responsible corporate behavior. And this already also very much sets then the frame of what this initiative is about. It's in the Commission perception really about supporting the sustainability transition of individual businesses and of the economy as a whole. So now in these introductory 2 minutes, there's not much time. So let me just mention in a couple of keywords. We are in the consultative phase right now. Already in the opening keynote from the Deutsche Aktieninstitut, there has been some references made. Unfortunately, I couldn't listen to all of it as I was kicked out, but I'm sure if there's a need, we'll get into more details in the discussion. Let me now say just maybe two items we really have evidence of and that are for us now the starting point of our considerations. That's on the one hand, the social norm of focus on short-term financial value maximization. And I do know that there is criticism around on our study, on the study that we have been commissioning to underpin these findings with evidence. What I can say is that these findings of really short-term focus is also based on more evidence than just this one study, but we can maybe come to the discussion of that at a later stage if there's a need. So this is one point of evidence we found. The other one is then the voluntary action and reporting, which have not now incentivized companies towards sustainable value creation and more responsible behavior. Another study we had commissioned found that 1 out of 3 companies undertake voluntary due diligence only. Of course, we also know that there are companies that are long-term oriented and responsible, and this is not surprising. We have a meta-study, we have seen a meta-study of 2,000 studies that shows that sustainable companies outperform their counterparts. And now also at the beginning of the COVID crisis, there was an analysis saying that sustainable companies have weathered also those initial shocks of the COVID crisis much better than others. What we have to do now is really then being aware that the sustainability challenges ahead of us in Europe to deliver on the UN Sustainable Development Goal, on the Paris Agreement, really requires mobilization of all economic sectors and companies of all sizes in a systematic manner in all member states.
Mathilde, I hand over to you.
Okay, can you hear me now?
Yeah, perfect.
Okay, so let me introduce myself. I'm Mathilde Mesnard. I'm Deputy Director of the Directorate dealing with finance and business at the OECD and dealing with corporate governance. And let me first say that I do agree with somehow the ambition of the EU to achieve a more sustainable corporate governance. And what we see is that there has been a mounting call in the last few years for companies to behave more responsibly, to be good corporate citizens, to adopt a longer-term view. It was mentioned by all the previous speakers. Michel de Fabiani said that they have their part to play. And indeed, we see the statements of the ones like the Business Roundtable or the WAF's New Davos Manifesto, or more recently in France, a report from the Institut Montaigne calling for responsible capitalism. All these, declarations somehow are fueling the debate over the role and the responsibility of the corporation and of corporate leadership. And this resonates also with some recent reforms that have been undertaken in a number of countries, including in my own country in France with the Loi Pacte 2 years ago, Pacte, instituting enterprises with a mission or raison d'être. It goes also with, the recent debate in the UK with the work of Oxford and the future of the firm, and also the UK corporate governance reforms that aim at inter alia helping boards take better account of stakeholder views. Also the reforms on executive pay in the UK also that mostly come from concerns about social justice. So we have these mounting calls for reform, and now we have the crisis situation that has really further sharpened or fueled these calls and strengthen the expectations from the society to be more responsible. And I do think that now, there is more urgency to move to corporate governance models that are to more sustainable corporate governance models, to build back better, as seems to be the mantra of our governments. And building back better really means somehow to be more sustainable, to be more inclusive. It was mentioned by Peter before. And I do think that corporate governance is really fundamental in this endeavor because it's somehow corporate governance, it's about who has the power to decide on what, how these people are held accountable, how the profits are shared, etc. So it's quite fundamental to this kind of social or business contract. And redefining this fundamental contract is at the heart of the current corporate governance debates and reforms. And if you look at the recent reforms, for example, the one regarding remuneration issues, the one regarding board independence, board diversity, risk management, ESG disclosure, etc., we have had a series of reforms in many jurisdictions, and they are all going somehow in the right direction. But these are somehow incremental reforms. And the risk is that meaningful and impactful change may not come fast enough in light of the today's challenges that were highlighted by previous speakers. So somehow we are fixing the symptoms instead of addressing the root cause of the problem. And I do think that we need a more holistic, a more integrated change. We cannot just fix bits of the system of what is deriving from, to my view, a very fundamentally wrong vision of what is a firm and how it should be governed. So what we need is a reshift, rebalance the focus on the company's health and not so much on shareholders' wealth. So, you know, it was already like mentioned and discussed by the previous, by ecoDa in our introduction, but somehow the company should be the priority. And it goes with also the criticism of the view that boards and managers are the agents of shareholders. No, they are the agents of the company. And it might be more complex. And yes, it might be opening the Pandora box, but I think we need to do so now. There is a huge momentum to move on these issues. And I think there is a political moment where we need and we can build up new norms. And yes, it's complicated, but we have to do it. And we are really entering a battle of norms. You were mentioning regulatory competition, and that's where we are. We know we have a battle of norms, battle of data also. And the question is whether the EU will stay isolated or be able to lead a more global movement on these issues. And because we need global norms for global business. So that's where I come from, you know. Okay. And maybe I would tell more what we are doing or what we plan to do in our corporate governance committee at the OECD and what the role the OECD could play in this construction of new norms.
Yes, certainly we will come back on that. So I will hand over to Per Lekvall. So we owe him the Swedish Corporate Governance Code. So Per, the floor is yours.
Okay, thank you, Jean-Luc. And thanks also to ecoDa Mazars for inviting me to speak at this event. I will use this opportunity to highlight a few aspects of the present EU regulation agenda regarding corporate governance that I think would benefit from some fundamental rethinking. And I do this against the background of the widespread and often quite severe concern that this agenda has caused in several member states, among those certainly Sweden, during the last 20 years of its existence until now. And I'm convinced that this unfortunate state of affairs could relatively easily be turned around through some fairly modest reconsiderations of the approach pursued so far. And to this end, I have three main proposals as follows. And now I'd like to have my slide, if I can have that. Let's see if I can.
Yes, normally the slide is on the screen.
Nobody's okay. I see. Well, I have to take it back. Well, my first point anyway, that is to better evidence-based regulation. It appears to me that the Commission's ambition in this respect has actually decreased over the years. And the most recent example, that is the present initiative on sustainable corporate governance, based on this study that ecoDa referred to, which is widely rejected as simply not up to standard as evidence basis of EU regulation. I think COM should really sincerely reflect on that and take this proposal back to the drawing board and come back with a better evidence-based proposition. After all, I would say quality should always trump haste in EU regulation. My second point is more principles-based regulation. It's a common criticism of the EU regulation has been that it's too often overly detailed and prescriptive, which causes conflicts with existing rules and practices in the member states. I think a better approach would be to agree at the EU level on common norms in terms of more overall principles, and then leave to member states to impose necessary national regulation to implement those in principles to an adequate extent. And with regard to the national circumstances prevailing. On the other side, the flip side of this is, I think, that the Commission should have much stricter follow-up and control than today to make sure that this implementation really delivers. So this is really a two-coin message. The third point, finally, is, I think, to increase the focus on governance issues relevant in ex-Brexit EU. Until now, I think the EU regulation, for some strange reason, has been very much focused on matters typical of the Anglo-American corporate governance system, which has led to discussions about independent directors and board commissions, shareholder empowerment, and most lately short-termism, which is all very typical of jurisdictions dominated by dispersed ownership. If you look at jurisdictions with concentrated ownership, for example, short-term is a much lesser problem. So I think that for the future, focus should be more on issues typical of the EU jurisdictions after Brexit, where you find concentrated ownership, strong shareholder powers, mainly non-executive boards and so on. And there, I think rather the key issue should be minority protection, for example, related party transaction, transparency, not to say to look into different dominating ownership models of various kinds, like families, foundations, and so on. I think with these 3 points, I think it would be possible to have an EU-level regulation that would be much more relevant to ex-Brexit Europe and actually deliver a more level playing field as well in terms of corporate governance. Thank you.
Thank you so much, Per, for these introductory words. Not that we all have set the scene, maybe the first question will be for you. In terms of balance between national corporate governance code or European regulation, the balance between entrepreneurship and accountability, what are the key principles of corporate governance to keep in mind?
You're asking whom?
You.
Okay. Well, could you repeat the question?
I would say we see that there are national code, European trends. There is the balance between entrepreneurship and accountability.
Okay.
Clearly at the level of the board. So in your mind, what as a founder of a code, what are the key principles?
Yeah, well, let me first comment on the question of hard law or soft law. I think that's not a question of either or. It's a question of both in a reasonable balance. And I think hard law, that is for matters that all companies will have to always manage to get over. That defines a lower threshold, basically on a rather basic level. Comply or explain type codes, on the other hand, can put the bar at a higher level, have an ambition to reach for. And in that way, they complement each other. But I must say that it is to a large extent comply or explain codes that has actually driven corporate governance towards higher quality in the last 10, 20 years to a large extent. That is one point I think. I don't know if it answered your question exactly, but let me also say that I think we have to be very careful, in terms of regulation, not to stifle entrepreneurship. And for example, like Carla Helt asked, the question is, if you have a company that is supposed to live up to a lot of different wills, do you think that people will actually put risk money into these companies? That is also an important question. Thank you.
Thank you so much. Clearly, we have seen Roger. I don't know if you want to speak a little bit about that, but apart from Wirecard that was under investigation, we have had also some UK companies failing in the recent past, and clearly a lot of report, a lot of recommendation. How you see finally the root cause and the main recommendation in this area of corporate governance, how to organize a better corporate governance in order to cope with those recent issues in your view?
In the UK, we have a new Secretary of State for Business, and he has actually announced his priorities this week. And those priorities are really very much relate to the collapse of Carillion in particular. And they are going to focus on the reform of audit and the audit market. And there have been some major government-led studies relating to how audit should be reformed in the UK. One important one in particular relates